Greetings, market rebels, and welcome to this week's macro measure combined with this week's sector situation. As I have been doing the past few weeks, I did change the naming convention. So we're going with this Friday, July 5th, 2024, and it's just about 20 to 3 here on the East Coast. So the market hasn't closed yet. My colleagues are taking care of UOA Pro for me so I can get this taken care of. Here's our trusty disclaimer. And here is our trusty intellectual property rights notice. And then we can get into just a quick review of last week. So I don't often do this, but I thought it might be worth it this time just because we have been under an Esterhaus warning, just to be careful out there warning for a while, because the market really was unimpressive. Now, remember, we did talk about the fact that the buyups had dried up. Buyouts had been drying up for, I think they were running through mid-June when they were just buying shares. That goes into hibernation for a while, I guess, getting closer to earnings. And so that kind of dried up. And that maybe helped create that sort of not weak, but sort of like listless finish into June. And we said, the second quarter could bring this. The holidays are typically that, and so on and so forth. And you had to wait to see the whites of their eyes. You just can't be sure ever. And you got that. When they started breaking things out on Tuesday, they pretty much got a hold of the market. Holiday effect that we talked about kicked in. And there you go. You get your week where you get that week where you end up where we are now, which is at new all times, or just slightly removed from them. Another comment would just be the consolidation broke in accordance with the trend. So we've been harping on the trend and just saying, look, just basically when in doubt, go with the trend. Why? Just because they persist. They persist. So it really takes something important to reverse a trend that's been going on as long and as strongly as this one has been. July, as we noted, was normally quite good on its own. And you have the big markup motivation to like right in front of the holiday or around the holiday. And we're getting that as well. And there's a lot of people probably just sitting this out, making it probably thinner conditions for folks to move things higher, chase things. And there could be a little bit of late day selling here where maybe people had a better week than they thought they would, because holiday weeks can often be, and this one was a pretty chopped up week. They can often be kind of boring sometimes, but this was a pretty good week for the gang. They did move things up quite nicely, and they do remain unconcerned about the mild damage we noted last week in certain sectors. Now, that's the thing. I've got a couple reminders here for that reason. I'm just going to jump to this one with I'm hoping everyone can see my cursor. Let's just make sure. No, it's not popping up on here, unfortunately. Well, I don't think I'm going to risk anything, or maybe I'll just take a crack at this. Maybe it will let me just do this really quickly, and I could just do that. And I hope it shows up, but I'm just going to really hit on that this week. And this is why we were in an Esterhaus warning, right? We were pretty close to what we thought would be important support, and they just really couldn't crack it, right? And that's why it's very dangerous, and in my opinion, to start to get concerned about things that are problematic, but then really just force the trade on too quickly. And I don't want to say anyone's wrong for doing it their way. I just would say to folks that still haven't decided how they like to approach things, I think this way works well for me, where I really don't get aggressive until I see the trend. Especially if I'm going counter to trend, I don't get aggressive until I see a crack, right? Because way more times than often, without a crack, the trend just keeps going. And so you're really playing a very aggressive and I think difficult game to play the short side against a very strong trend every time there's issues that pop up, because it's not always like clockwork where everything works out perfectly. So we have to know what we have to know from week to week, because we don't want to get caught off guard by this, that, or the other thing. But at the same time, we have to always focus, I think, on, at least the way I do it, on the trend, some form of support cracking. And you can note all the problems with the market, but until you see that, they really don't matter, because the market isn't concerned enough about them for the downside to occur. It just keeps going up, So, right, what are you doing? What are we doing here? Is a question you have to ask. You just you don't get points for noting all the problems that are out there. I'm not disagreeing probably with most of the things people would note being out there. I'm just saying that, yeah, you just got to bide your time, right? If you don't like it, then bide your time. So, as I always note, let's get right into this. Ponder IV acquisition, longer dated, net long puts, VIX seasonality is different though this week. That's the quick update on that. The VIX is really coming into its time of the year. So just beware of that. It's kind of conflicting at this very moment, but in the near future, it's really set to begin rising and typically rises into, I believe, really into and through October. So, and then maybe starts to level off. But anyway, I don't have that graphic, trying to keep things shorter by many requests. So set your playback speed to 2x. Just again, the reminder, when in doubt, the play has been yet again to rely on that trend. And it's the most trite thing, overstated thing. Trend is your friend. Everyone kind of cringes when they hear it, but unfortunately, it's probably one of the truest things out there, or fortunately, depending on how you want to look at it. And that's where you really, if you're in doubt, you basically default to trend resumption, right? If you're in a consolidation and you can't really say there's a big problem yet, you're trying to wonder what's going to happen, how's this going to play out. Odds are it probably plays out in the direction of the trend, and that's what's happened time and time again. Even when we've spotted issues where we had some concerns or thought there could be things cropping in or developing, it hasn't materialized. We've had recent bullish ideas on nearly all the megas, which I'll try to cover in the charts. And also we had the SPYs as well. So it's not as if the market has been surprising anyone that follows UOA. And there have been players putting money where their mouth is with respect to these megas. They just came in for them and they just keep going, right? A lot of them are just running. And we got the new all-time, that's what helped produce the new all-time highs in the Qs and SPYs. This week was, I think, was a little more impressive in some ways because there was some really good, strong moves from some names. That wasn't against really bad movement, right, from a lot of sectors. So a lot of sectors didn't really do much. They maybe on balance got a little better, but they really didn't do much. But yet the leaders really started to lead again. That would, of course, be your XLC, your XLK, and XLY. We talked, I think, about XLY last week in the video about keeping an eye on it, maybe going into there, finding some names that you like, and maybe participating. And hopefully some folks were able to do that. But let's not get too far ahead. So let me see if they'll let me just have the laser pointer. Maybe they will. There it goes. Sometimes this doesn't work for some reason when I record on Zoom. Anyway, I didn't think this was an easy week to trade. I think the holiday action really chopped it up. So kudos to whoever did really well. You did a great job. I think the SPYs and Qs are definitely short-term overbought though. It's going out. So if they close these things strongly, I think you could see a little bit of hesitation early next week, and maybe it takes a little bit of time for the market to get going again if that's going to be the scenario that plays out. The canaries are still there. My two big ones have been IWM, still sitting it out. XTN just won't go. And even the diamonds aren't running. So they look a little better to me than other things, though. So there maybe you're on the brink. We'll try to look at those. As I noted, a good sign. I don't think I mentioned AMD because I got off track in last week's cocktail hour. Hopefully I did. Maybe I did. I don't remember. John, they asked me for a few names and I just said I wanted to talk about AMD. And I think I didn't do it because we went off in a different direction. And then I meant to mention it in the videos and I think I may have omitted it there. And I look back and I'm like, man, anyway, we did have UOA on that one. And that thing did try to break out as well. I think NVIDIA looks poised to break out. I mean, it's really very close. Last I looked at it a few minutes ago. SMH certainly did get through that consolidation. And I think you're starting to see the leaders. In other words, like you're leading up to where it becomes risk on. And there's some questions down here we'll cover related to that. So the sectors are still not out of the woods because there's still problems. All the problems are still there, but they're not as bad, I don't think, as they were. There was a little bit of an lurch towards a more positive direction or overall from the sectors, but I don't see anything cracking, right? We didn't see anything crack with the SPY, with the Qs. The SMH didn't crack. These are all of our main watches for the big stuff, and along with Nvidia and the megas and the rest of them, I should say. And you just there's no trade there, right? You can get all juiced up and get ready, and I don't even think that's bad. It's just that you've got to have the discipline not to pull the trigger too early against a persistent trend, a strong trend, one that's been relentless and hasn't even allowed for corrections. I mean, it's that are normal in terms of percentages. There's a streak or two running right now in terms of the omission of a correction or lack thereof, whatever you want to call it. Some would say it's very artificial. Maybe it is, but I can't say that because I'm not sure. Anyway, I still think, right, you got to look at the fact that the dollar and yields rolled over. And as the stocks moved up, they rolled over. So the cycle's kind of back there where they drop, stocks rise, vice versa. Generally, VIX is still depressed. I still think there's big time complacency out there, but that's what these reminders are for up here. So I would just position yourself smartly. And it doesn't mean you do it tomorrow, but you just got to be ready. And Ryan covered some of that. Maybe Greg did. I'm not sure this week. The VIX is, despite the complacency, it could still get further smoked. So if it doesn't, that might be a sign, right? Just because this presidential election cycle we've been tracking, July's in general, and then the rest of it, right? The EPS celebrations, that's all potentially on the way. If it is, right, that could be really a problem for the VIX. And if it's not, I think that's a very telling sign. So if it does get further smashed, let's say down below an 11 handle, where it would be like, wow, the VIX is that's maybe a time to step in. Maybe even before then it is too, but it just that could happen. So just keep that in mind. I would say that the subsurface of the market is fairly unimpressive. When I look at basic market breadth indicators, I look at the sectors, I still see problems there, but you're getting stellar performance out of your mega caps. And you've got to keep that math in mind. The math is the math. So for people that aren't really focusing on that, they're just not realizing, I think there's some even people that are professionals online that seem to be, I don't know, I mean, kind of like shocked at the whole thing, but it's really comes back to the math is the math. And you can't forget about what the weightings are and how big some of these companies are, and such their price changes matter a lot versus others. And so that's really how it's getting done. So the math is the math. And again, without, you can even have a problem with that. And I wouldn't really argue with you, right? Because so many things aren't doing very well, but the markets are, the indices are to this point. And again, as long as you insist on getting a crack of support that you can trade against, and then if it gets back above there, get out, you're fine. But if there's been no crack of support, there's just no trade, right? There's nothing to do unless you really want to position longer term, like we're talking about here, and manage it properly, which is a whole different ball game. It takes a lot of effort, and you've got to be all over that stuff, but it does pay off, I think, in the long run to do that if you could fight your theta off in the short term. Anyway, we talked about that. Remember, they could really marvel at themselves, right, when you get this EPS season cranking. If there's a way to jack things up really kind of stratospherically and bathe in that kind of warm glow of, wow, we crushed it, we crushed these reduced estimates, they'll do it, and that'll be possibly reflected in stock prices. And that could be that kind of final for this phase, right? That could be the last few months, could lead to like the last few months before we maybe get some sort of some more significant pullback, or who knows, that maybe something erupts domestically or internationally before then, and that you never make it that far. But anyway, there could be that one last take your breath away phase we still haven't seen. I haven't had my breath taken away yet. Maybe I'm too old. So I'm kind of used to this, but when it happens, it'll be so vertical in such a short period of time, and then it'll be persistent too for a while, and it'll just be like, man, that's insane on top of what we've already done. That's really the moment when you know that they might have pulled every last short out against their will, and then they'll let the market fall when the last buyer is bought. Anyway, Uh, the same old thing's still there. I'm not even going to get into it. The job celebration that they had today neglected to note that there were even more negative revisions, kind of like they do every single month. So all of it's been lies, really, unfortunately. And let's say the usual suspects are in on it. Um, the GDP now ridiculousness that the clowns of the Fed were promulgating a few months back, where they had Q2 GDP above 4, that's gotten annihilated. It's somewhere near like the 1.56 range at this point. It just goes to show you how the nonsense is just brutal. So I think I mentioned a lot of these things already. I think I mentioned XLE to get ready for it. It's been really a disappointing finish to XLE on the week. So I know you got the false breakout risk all the time, but there was paper. A lot of people seem to think that thing was ready to start popping. And of course, with so many people seeing the opportunity, they rug pulled it here on Friday. So we'll see if that's a 1 day wonder and they start coming after it again or not. But at least XLY moved. I think these three are definitely being affected by different factors as well. But overall, as I noted, just DXY and TNX rolling over. You get stock prices are up. The trend remains up, but we are ending overbought in the short term and really even on the daily in some of these things, some of the strong sectors and other things. But we're lifting the Esterhouse warning because we're kind of far away at this point relative to the 20-day SMA and the Qs and the SPYs. So it would take a bad day, right? And if a really bad day, and you would know that there's a reason to go back into the be careful out there mode because there'd be some massive news driver. And but otherwise, we're away from that, and you're making new all-time highs. And again, they could start to pull things up, and that's what I'm getting at. When we look at these begas, they're really going. We've had paper in the mall. There's been bullish ideas on virtually all of them because the paper was there and because the technicals were setting up as well. And that's just the way it's been. They do have NVIDIA ready to go, if you ask me. And as I'm asking you, I guess, right, could these start to just be the latest round of risk on where these things launch first, the leaders, and then boom, they start pulling everything else up with it. So on that note, let's now switch things around. I'm going to stop the share briefly, and we're going to get into the charts. But I just kind of speaking about this stuff, I don't see any major problems out there in terms of something obvious. So let me get this out of our way, and then let me get this back down here. I just see them being kind of giving us more of the same. Let's get screen 4. That's just how to do it. That's not I want this one here. So yeah, I'm going to start out here in NVIDIA because I'm here in NVIDIA or NVIDIA. Let's see if I have to struggle going between my trading view charts, and I have to just make the switch fully, but I'm still working on that just because I don't get a lot of time to work at it. But this is we all know what this stock is. We know what place it occupies in this market, this bull market that we've been in now since the last fall. So a couple months from now, we'll be coming up on the anniversary of the lows, and they've held it in check nicely to this point. But you can see, right, that the momentum's been kind of lagging and tailing off for a while. And so this is really what you want to see as a bull. You want to see a really strong run where the stock nearly doubles, and then you have this relatively minor retracement. Your worst case scenario is here, and it's been consolidating in a relatively narrow range. And they did break it out through the line that we had there. You can see that line if I lift this up a little bit too. Well, I got to get this is one clunky thing I won't miss about the Thinkorswim charts. There, it did it on its own for some reason, but you get the idea. So there's your line that I'm referring to right there. And we got through there, but it's still kind of entangled in the 15. It's near the 20, all that kind of stuff. But it's really near the high of the week. It might just be they want to frustrate the living daylights out of somebody that's got the 130 calls that bought a ton of them. I don't know. I mean, I've seen this happen many times. Let's just check that out and see if there's anything that's out there that's just a massive open interest nearby. Oh, the 128s there's a heck of a lot of volume there. Yeah, so it really, you could pick any of these, but this might be keeping a cap on it for now. Once you get above 127, the volume starts to really jump, and you get increasingly significant numbers of OI. So for now, they're sitting on that, but I've seen that happen, and I've been on both sides of it, where I was lucky when I was short, and I was really ticked off Monday when it broke out, when I was long, when they finally would release it. And my contracts expired on Friday, and my gamma was diminished or something like that. But anyway, look, that's poised. I mean, I think it would really would be news if it didn't go right. That would really be the surprise, that the trend has been what it's been. Um, it's got its chance. It's getting close, and then it doesn't take it, and the rest of the market goes, if the rest of the market's capable of going without it. But as of right now, it sure seems like it is, right, with NVIDIA not doing all that much, and the Qs are up 1% and the SMH is up small after a couple of good days. So, but let's talk about AMD. And I do apologize if I did not mention this on Cocktail, or I should say, or neglected to also mention it in our video, because I meant to. It's really, I look back and I'm like, damn. And then I kind of remembered that I maybe didn't get to it when the paper showed up, and I'm like, wait a second, did I ever get a chance to mention them? Because I really liked it, and then oh well, it happens. It just had some qualities or characteristics that were told me that this could start to happen, and it did, unfortunately. And I hope I mentioned it. If I didn't, my apologies. But the larger point, aside from one maybe good trade idea that would have come out of last week for folks, would have been, it really is, if this thing gets back on its all four legs here and starts to really gallop, because it's very close to breaking out in a bigger way, and you get through probably the 181 area. So if it can really break out and go, there's not a lot above that 181 area to really keep it in check. And so notice how much this is lagging the market at this point, and lagging behind SMH. It's been correcting now for, it's over 3 months at this point that it's been correcting. So it's going into 4 months of correcting. So it's been lagging for a while. The market's done well. The semis have done well. There's a lot of potential in there. We saw paper on it, so that would be something that would be big, sort of like joining the fight. Intel is a clown show compared to what it used to be, but it too, I don't trust it nearly as much, by the way, but it too is starting to flash some signs that it could go. And again, that would only help. There's a gap back here. They've got a couple things with some paper. The only problem is, and let's cover this right now, let's cover the Qs. The problem is that you're ending up overbought, right? It doesn't mean it's over. It just means that it's not a great entry compared to where it was when they started playing the games on Tuesday with this market and started to work it back up, right? They faked the breakdown, but got right near the 20, and then boom, they go. There's our line that we had in there from, I think, a while ago. And then, boy, they just held it right above there, held it right above the 20. This is why I tell everyone not to, if you're trying to bid, don't bid too close to your actual levels. You've got to bid in front of those, so that you have a much better chance of getting filled, because a lot of people are probably charting it in a similar way. But here's the Qs right now. They're going to end up on the daily with a 76 rounded off RSI, if you look down here. So if we go over to here, not that can't go higher. Clearly it can. It's just that, right, you've got to be a little bit more, I think, aggressive about your rolls, right? When you enter into something that's already overbought, quote unquote, you've got to be quick with your rolls, because you're not getting in early when something's already overbought. And typically they can stay overbought for a while, but usually you could have a couple of days of frustration, or maybe you get out because it's not working anymore, and they've got it right back up again. So it's a lot easier to get in, obviously, right, when you see the signs and it hasn't reached overbought status. But it's also overbought on a weekly view, right? And it's overbought in the short term. And this is why I'm spending the time on this, because this is really no joke of overboughtness. I don't think it means impending doom. I'm just saying that if we do start to get out of the gates bullishly next week, you may just want to be a quick roller, right? If it keeps going, gets even more overbought, great. But if it doesn't, and you kind of get a little rug pull going against you, having rolled or quick trimmed or both will help you, right, to fight your way back to a small win, as I always say, or it will fight your way to, you can fight your way towards maybe just break even. The spies are in a similar boat with similar numbers, and the short term's the same for them. So it's not as if they're any different, and they're making new all-time highs. And one thing I've kept in the UOA, sorry, the Rebel Pit Pro and Rebel Pit Elite newsletters, this, and I've even had it on our slides, I think at times, is just that I still see there's big time potential in the market. And that's one thing that we've had to keep noting. And the reason why is just because there's so many things that keep showing up that would form doubt. But you can see just off of basic charting, just your resistance lines, the bigger picture ones, like the two I've got up here where the cursor is, that's where you could get to. And that seems crazy to probably to a lot of people, but we've had at least one of those there, I'm pretty sure, for a while. And I just extend them out and extend them out and extend them out. And what seems like a joke in my book often becomes reality. And at least it has in my career. And that's why I'm sharing that, because I think if you're a bear, you could probably have a conversation where you would find a lot of agreement with me, because I'm sure your rationale is probably very sound, going against historical this, that, the other thing. Look at where the economy is. Look at where the American consumers. Look at where debt loads are. I probably would agree with you on most things. It's just that I've seen these guys operate for a very long time, and they're not going to let anything that you're worried about matter until they're ready to let it matter. And so you could be way, way ahead of the curve. And if you miss out on opportunities to the upside, that's really a shame. Fighting it is even worse, but missing out is bad enough. And then, you really have a great chance here if they really do keep this going. And remember, probably the one way that you can guard yourself against things like that is just to simply come in here and say, look, this is the all-time high. As long as these guys are able to keep this thing above that, I'm going to keep trading it from the long side. And then if they do quickly reverse it back down, I'm going to stay out, right? And you could even put another line here. This is what I mean by like aggressive. You could use aggressive support. You could use the 5-day or something like that. Some people run that. Some people run even shorter SMAs than that. So some people run them exponentially on top of it. So you can do all that, but there's a great example, I think, of where your two lines pretty much tell the same story. And if you get back below 550 in this SPYs, you probably want to have a conversation with, your risk manager hat that you would have to put on. So, but otherwise, right, you can see that there's still potential for this thing to keep moving up. And they think there's a lot of people out there, and they're not ever really bashful about betting with your money, right? They're the managers of other people's money. And if everyone else is betting, they feel compelled to bet. And they're not going to leave a lot of money in cash, because if they do, a lot of people will complain that they're not aggressive enough if they're lagging behind other funds that are similar, that have great performance, that are going all in. And a lot of these people are convinced that you're in the early stages of this AI revolution, and it's going to be this wonderful thing. And it very well could be. I'm surprised that people think it could really be, I don't know, adapted so well, so quickly. I could see that happening in like maybe, I don't know, end of this year, a couple of years, a year out from there, whatever. I don't think it immediately seems like this year to me, like that really had a chance to develop. But I guess people are just buying really with the future in mind, thinking there's going to be this big payoff for it, and there very well may be. I don't dispute that there's a craze happening. I'm not an expert on it, so I can't really say anything about it. It's just that to me, right, they're going to buy first and worry about risk later if everyone else is buying, and that's why you've got to grant them that a lot of this seems at odds with so many factors. But that's why I would continue to say, not that I'm a bull, but just that I'm going to say that we're traders and we're trying to trade in this thing. And I see a lot of upside potential still for this thing to keep going. So whatever, for whatever that's worth. And we've been saying that for, honestly, if you go back to it, I remember I was traveling at the time, and right after these lows, they started to move things up. I was traveling and we had to do something. I had to do something from a hotel for cocktail. And I think I said at the time, I wouldn't be surprised if we don't be surprised if they get to new all time highs. And don't be surprised if they, maybe even go beyond that. And, they did, and I'm not saying that to pat myself on the back. I'm just saying that what I learned from having gotten it wrong, painfully wrong when I was younger, is that trying to connect these dots of, hey, stock prices are going to be here because of this, doesn't really work that well. At least it didn't for me. And just observing what they're doing, like we have been, and being objective about it, and then saying, look, there's problems building, but they haven't cracked anything. It's problems building, but they haven't cracked anything. And you keep going along with that, and basically, deferring in the trend's direction, and then that serves you well. You can see how persistent these things have been. You had this one corrective phase here that's probably more significant, and otherwise, right, they've pretty much have come after these things most of the time. There's little wiggles and waggles, there always are, but most of the time. So short-term overbought, nothing's cracked. Probably got to wait for at least the 550 level here. On the Qs, I could do the same thing. I mean, these are the traders at the moment, so we may as well spend a little time on these things. But I think I would pretty much do exactly the same thing, because they're trading in a very similar way. So you got that, and you just bring in your flat line across the former high, which you're going to see that the market respected a little bit right about there, and you're good. I mean, at this point, you could say, well, could there be a pullback? Yeah, but the reason I'm taking the Esterhaus warning off is because really important support in the eyes of most people, probably that do this kind of stuff, would probably be the 20-day, right? Because that's pretty much carrying the longer term trend with it at this point. The 20-day is a good proxy for really. I don't know why I forgot to grab this over here. The 20-day is a good proxy for in a bull market for support quite often, right? So it's kind of like a dynamic support thing. You could probably drop that about there to catch a couple other candles and not just go with the absolute extreme wick bottoms. And it's very close to there, right? So, and that's why you've got to allow for like little things like this too, because remember, they're going to dip below key areas to flush people out and then bring it back up by the close. They do this all the time. So it's been going on for as long as I can remember, and that starts even before I got on the trading floor in '92. I was already like a kid doing charts somewhere. I forget what I was working with at the time, but it was something primitive, obviously. But anyway, I think it was really all paper I was using at that point. But anyway, yeah. So this is getting towards overbought, just like SPY. But there's really nothing terribly wrong with it. And it's, how can you say very much bad against it when it's making a new all-time high? And it might even be in a low volume affair. It might even be in holiday action. It might even be like with a skeleton crew at manning the exchanges, if they even exist anymore. But it's happening. And so that's where we really are. SMH, though, this is the interesting thing. This is looking better. Right? I think this is looking better as an opportunity if they ignite this, right? Because this is not nearly as overbought. So this could actually be, they could actually chill out on some of the other names if they ramp up this, which probably means they're ramping up NVIDIA. So just keep that in mind. But that's only at about 65 on your RSI right now. Again, I don't do be all end all, and I just use it as a gauge. I'm not really a stickler where it has to get to 70 on the nose or higher, and for me to say it's overbought. It's sort of all relative, and it's sort of all you've got to like dial into, I think, the market you're operating in, the specifics as best as you can to really refine that. But that's a whole nother discussion. But that looks good. Now let's go through, right? Let's just for to be thorough, I should probably take a look at diamonds first. But the diamonds to me are a laggard at this point. I don't know how anybody could call them anything else. They're just not doing it, right? They're not making the new high. But as I noted in the notes, they do look prime to me. So if they're able to keep this going next week into the middle of the month and then into EPS, remember, this thing looks good. I mean, you have a nice solid pullback here. They've been sort of upward correcting ever since, if you will, and they're really close to these highs and this close. All they really need to do is bust it through. Then they've got this in their way, that one kind of like fleeting high, one-off high there, and boom, they're probably right back at the all-time highs. And that's not a massive move, right? You're only talking about 700, 650, 700 points, which is really not even 2%. So that could be back there, no problem. But it is lagging right now. So that might be an opportunity. I mean, if you're in the services, you see any diamonds come through, it might be an opportunity, for you there. I'll treat it that way if we do get any paper. I think that's just lagging. And if they're going to pull this up with it, is my point. If they keep going, so they manage to keep going somehow. I just feel like the early part of the week could be hard because of the short term and overboughtness overall. But IWM is the canary, not there. Like you can see that it's literally sitting on a line. I guess we probably drew last week a short term line. It's the 150 SMA that's rust colored there, along with our support line, and it's holding there, right? But you're really kind of triangulating here. You could draw a line from here to there. You could draw a line from here to here. And then you could draw shorter ones. And I'll just draw those right here, the short one, to go along with this. And you're getting towards the apex of the triangle. And typically when you get about 3/4 of the way through, that's when it's go time for a breakout. Usually you'll get that breakout before you reach the apex. So you're getting close to that time. Again, if they keep pulling this market up, I think eventually they'll pull this up with it. At the same time, right, you don't want to get too far ahead of yourself because we are short-term overbought in those other index ETFs. So you've got to wait it out. But that's the story there. I think that IWM is the big problem. But again, breakout attempts have happened there, right? So I would be willing to go with them. It's also not a good sign, though, if the small caps just can't go anywhere, right, when these other major indexes just continue to power up. So that would be a negative sign. But like I said, I think they're on the cusp of bringing the diamonds along with them. So just keep that in mind. The other kind of canary, though, is XTN. And I'm a stickler on this, I guess, but I just have a big problem with transports not being able to really get it done, because that's really indicative of the economy humming along, where there's a lot of product, right, for business, for the consumer, moving through the transportational arteries, right, of the country. That's not really firing very well, and you're still well off of the highs that were put in late last year. So this is kind of like, this all is not well. So that's one reason, along with IWM, like these smaller caps not participating. I feel like those might be more reflective of the economic realities out there, while the other bigger ones that we've talked about, especially SMH, obviously, and the Qs, XLK, they're more reflective of this new wonderful era that's about to dawn on us, according to the way big investors are positioning themselves. So, and that could be true. I all the dystopian novels aside and movies, that could be true. I don't know. I don't have a great, when I saw what these guys have done since their early days, I really lost any faith I had in any of these tech people, because I think they've all revealed themselves to be fairly loathsome human beings, and with how they treated people. But that's a whole nother story. But anyway, this is the canary that I was talking about. I don't even want to belabor things. I'm just going to flash the VIX and flash TNX, but these rolled over. what can I say about that? They were on their way towards potentially maybe breaking out. They're not there now. The CME, I think there's about a 75% chance that we get some degree of cut in the SEP meeting, which I think is mid-September. So you're only at this point, right? You're maybe like, I don't know, 2.5 months away from a rate cut. So according to the probabilities, now they've gotten it wrong many, many times, but they're starting to really get high. 75% is no small thing. That's a pretty good lean or tilt there. Here's yields coming down as well, to kind of maybe an agreement, what we could say, but they just failed to lower high, failed to break out. And you could see if they fall apart here, right, this would be good for things, you would think, right? So maybe that's coming, but the one little footnote on that though is that, remember, the problems really arise for the market when they start cutting. So you normally have negative double-digit performance in the 12 months that follow the first cut, according to, again, the guy Nick, that sounds like he played in the Yankees organization as a second baseman. I always say something stupid, but he did it while he was at Ritholtz Capital or Ritholtz Wealth Management, whatever they call themselves, and you could probably find it. He did a study, and that's what it turned up. I, of course, don't have the time to confirm that, but if true, right, it's kind of interesting, right, when it's really just more of the sell on news, right? Buy in anticipation of the cuts, and then when everyone else shows up to buy, hand it off to them, let things drop, and then come back in for it right after that big drop, and start scooping them up again when the economy is getting closer to really turning it around due to the stimulus or the lower rates. But the VIX, again, right, you're barely off of a low that was kind of you could compare to a multi-year low that goes back several years. So still there for the taking. Like I said, the sweet spot for the VIX seasonality pretty much starts soon. I don't have the graphics. I've tried to keep these a little bit combo videos a little bit shorter. But there's really nothing else to really write home about in terms of like, hey, this is a great opportunity, because a lot of things, like we said, XLY ran. That was one that looked good. Unfortunately, I don't know if anyone got in yet, but hopefully some people did find some names in there. XLF, I mean, I wouldn't forget about this either. We saw some paper in here. It's failed to break out, but it could really just put a couple of decent days together and be right at the recent high there. And, you don't know what could happen at that point, but it's correcting nicely. It's holding up, right? It's been flatlining now for some time net, and it's holding above the 100. So if they start to try to break that out, I would get ready to take that trade. Excuse me 1 second. And then the other one of note, this is an important sector too, but the other one of note is XLE. Now this looked like it was ready to go, and you could see yet again more failure. And I think maybe too many of us thought it had something cooking, and we saw the paper come in and they just wouldn't let it get above that 50 and go. And even people like me that are not big on SMAs, but I do believe that they do provide support and resistance. And you could see just how important that was there on XLE. They could not get that above that golden 50, and it's just failing, right? So here's your, well, what happened here? Am I getting, oh, it doesn't like, something happened weird. Doesn't like that CL. Let me see if I can get some kind of CL that it does like. It's not giving me anything. Let me try that. Maybe that'll work. Light sweet crude oil futures for August. And that's another thing that kind of left me baffled, because you could see that these kind of moved up. So I was a little like, wow, I thought we were going to get what we were waiting for. So that was really a good job by the gang to fool probably a lot of people, myself included, as I thought the stocks would start following this thing, and they just didn't. My apologies. I don't know what triggered, to be honest. So I hope not a lot. The other thing that might be worth mentioning, but this kind of goes hand in hand with the dollar dropping the way that it has the past few sessions, is your gold and silver's back, and there's been some paper there, and we have a SLV idea that's good all the way until October 18th. because I didn't want to not have anything for folks to go to. I still think the trade for the metals is higher. Long-term trends are still up. So I I wanted to have something in the system for that reason. But we did see more paper in there too. The XLK I'll cover because it did have a very good pop this week. You can see that right once they pulled those shenanigans off there on Monday, reversed it. Then you get Tuesday, you get the Wednesday abbreviated session, and Friday, and you make a new high. And then XLC has also been right. This is really due to Meta, but this is XLC has really been powerhousing today. And now XLY, though, that's the one I wanted to cover after XLP. I'll cover that too. But XLY, other than the problem here is just short-term overboughtness now. But that's, I think, what we were talking about last week, that if it could start to go and break out, it would have something. Like I said, hopefully some folks got involved in something there. And then XLP even started to fire up a little bit today. And I think there might be Walmart might be doing something, and I think that's got to be related to XLP. I'm not sure what it accounts for, but I sent some UA along to Ryan to see if he would be willing to put an idea in on it while I did some recording. But they came in for some paper here today on that one too, and that's that's making a new high. But let's take a look at the megas, like I talked about. Again, we did have an idea on this one. Like I said, they came in for these things, and it was pretty hard not to put the ideas in because the charts looked good, the market was acting well, and there was no crack of support, and you had people buying calls pretty aggressively. So this had an idea, and I'm not sure how well it did. At least it went up though. The same thing here. I think this one's stuck here, even though it made a new all-time high, and it looks like it might even be about to close. It's very close to closing at a new high in Amazon. But I don't know, maybe it's just digesting. Maybe it just ran a little too much, last week, and it's just consolidating right now. We'll have to see. We had those. We also had Google recently. I think, unfortunately, that was one of them that it might have done okay for people, but I think, unfortunately, the contract ran out on it as of last Friday, unfortunately, and I don't think we saw any more paper. I wish we had, because I've been liking the charts. I mean, it's really hard not to like this chart. So I think so. I've been, whenever I get a chance, I've been trying to put that in. Meta, a couple times really disappointed me and didn't do anything, by the way, just to let you know. But yeah, I mean, just the chart kept looking good. Meta having remarkable day, and another one that I had an alert on and took it out, and by the time I could come up for air from doing other things, it already just blew $10 past there. Unfortunately, we have a snap idea, and that's, I don't know what the news is on, but that thing's been languishing, so hasn't really broken out. I don't know, maybe if there's news on that's social media oriented, maybe it'll help it. I don't know. It did seem to turn around and get its butt off of the 50-day that it touched earlier today, but might be worth looking into the news, because if it does spill over here, some kind of a sympathy move, this thing could break out. I've been at times really getting close to table pounding on this one, thinking it should go higher, not based on fundamentals, by the way, because I don't know really very much about it. Let's see, we have to take a look at Microsoft, another one that I think we had ideas on recently, and I think that maybe Greg and Ryan had put ideas on. There's another one there. Look at these megas, though. I mean, it's very hard not to say good things about these. I've had a bullish idea that was on recently in Netflix as well. They came in for that one, clearly. Tesla, I gave this out a few weeks ago this was back in here, and this is the problem, right? Like, I couldn't get back to it, and it starts doing better last week, and then they go bonkers. But I didn't get any paper to work with there, even when I went back and checked, because I really liked it to start doing something, and they did. But it's not in the way that I thought it would, of course. But they got the mission accomplished. That's quite a squeeze at the least. And then, of course, this is the laggard, if you can believe that, right? If we look at all these names, and right? This is your laggard right here. And so if they start to price this thing in accordance with the way they're pricing the other things, look out. That's SMH jamming. It's XLK jamming. It's a big weight now. It's one of the biggest weights now, as a matter of fact. And you've got they also ran almost at this point, with a lot of catch up potential. So I think there's a lot of that kind of thing that's out there right now. And I don't want to come off as sounding wildly bullish, because I do believe that it's uh, short term overbought for sure. So you got to be careful, I think, to start the week. You just never know. We don't know what the weekend will bring news wise, but really overall, I think you have to go back to this, which is, percentages keep playing out. And what did I put there? Percentages. Oh yeah, percentages keep playing out status quo, but overbought. That was my little shorthand there. And as I said, what I mean by that is the trend played out. The end of the quarter, last quarter, kind of petered out because there was a lack of buyers. They started this third quarter out. They kind of got excited about the third quarter. The early in the month money comes in. Then they mark things up in and around a holiday. So all the normal behaviors have been there, right? All the things, and the trend, of course, being maybe the most important thing. The trend has just been relentless, and they just can't crack it. So you just keep going with it, and you just keep winning. Unfortunately, I just don't think it was an easy week to trade, just because of how chopped up it was. So I think on that note, I'm going to wrap everything up. But I would just say that we have to fall a good bit before. I think you have to fall at least 1%, if not 2%, before you're really in any serious jeopardy of cracking anything important. You could crack the most aggressive support in the short run, but I don't think you're going to crack anything that's really going to lead to an immediate market reversal, unless there's a news driver, like I said. So I think your Esterhaus warning is gone. They're getting close to earnings. If they don't hype things in front of earnings, that does probably help them to put more moonshots together if the earnings come in line and they can manufacture those moonshots. If they do jam it in front of it, you probably all know that it's harder. If you go really hard on the jam in front of it, you take a lot of steam out of what could have been the earnings reaction. So you might not get as much of an earnings reaction. But they've got a lot of things back to working. The big boys are working really well, with the very kind of strange exclusion of NVIDIA. But we talked about how that's going to get close, or it is right now. And so you got to keep your eye on that one for sure, for a lot of reasons. But I'm hoping, I'm telling you this, if the market chills out on Monday a little bit, maybe into Tuesday, then we get a turnaround Tuesday where they put the jets back on and start turning this thing up. I would love to see some UOA come in, because I think that's got a chance to take another run towards that all-time high right there, post-split at 140.76. But other than that, I mean, there's not a lot to say that's really bad. I think you could always look for better market breadth. You could always look for better sector participation. And at times we've seen that. It's not happening now, but no one's worried about that, I think, at the moment. And they seem to be getting the probabilities they want for the rate cut. The seasonality tends to be pretty good until Labor Day, overall, in this fourth year of the presidential election cycle. So they've got everything working really according to, you could almost say, the script or plan. And that's what I mean by the percentages keep playing out. We don't always know that they will, of course, but we follow them when they do. And as long as they track, you've got to mention them and consider them as a factor. And that's been working now for not quite 2 years, but if it keeps happening, it's going to be 2 years of where these things have traced out really well. So we're going to continue to talk about them and continue to mention them. We don't really bet on those exclusively, but everything you can get in your camp, right, to make you feel better about trading the right way is always good, right? And especially, right, having this trend the way that it is. And so we'll see what happens, but I think they're in a good spot if they can just have a little bit of a pullback, take the short-term overboughtness off, regroup, and then maybe come into the weekend with a decent close for the week. That'll set them up for, I think, the start of earnings season quite well. And we'll have to see what happens from there, because you just never know what the forward guidance will be from some of these guys. So on that note, I'm going to say I do hope everyone had a wonderful Independence Day holiday and a safe one as well. I want to wish everyone a great weekend ahead. Again, I'm just probably going to combine these from now on for the foreseeable future, until I get through what will be an extended stretch of just a lot of stuff happening on the weekends or things in general that I've got to take care of. So, on that note, we're out for the weekend, and thanks for tuning in. I do hope that something I share with you helps you out this week or some week in the future. Thanks again.